Hello, I'm Jeffrey Tennant. Trading is closed on the 8th of December 2014. As usual, let's start by going over a few predictions I made over the weekend. The first was that there was a mejt target of 2078.42. I said it was very close and there was no good entry, so it might not be tradable. Well, we gapped down, and although we came somewhat close to it, we didn't really hit it in regular trading hours. But if you look at the futures market, immediately we hit an overnight high of 2077.50, which is equivalent to 2079.13 cash. So as far as futures were concerned, there was relevance to the price, came within one handle. But that does not count to satisfy the price because it didn't really hit during regular trading hours. So we have a failed target. Let's recall that mejt likes to leave one or two failed targets at major changes in trend, and when it happens at a new high like this, you can't have the same degree of confidence it will print soon. During the day, the system said ultimately lower prices would print. These horizontal lines are a mejt support resistance area, which was defined in advance. The initial target was hit here. Later in the day, the system gave a sell signal. The S means it's a strong signal. The 2 gives the reason, and that worked. This is the failed target we mentioned previously, and there are no new unfilled mejt targets, and that forces us to rely on some other stuff. Before we get to today's analysis, let's just review that we have a Fibonacci resistance level around recent highs. We also have a possible even atom top, and if that's what this is, atom should drop like this and be somewhat symmetrical to that. We also have resistance from Andrew's pitchfork, and if this breaks, we aim for the middle time, which is under 2,000. Now, that's the review. We did have a buy signal on the 15-minute chart today from Tom DeMar. If these signals really pay off, we should go over the close of number 8 pretty soon, and I would give it until early tomorrow for that to happen. It's not really optimistic that we haven't broken out of the range of bar 13 in spite of having a lot of time to do it, but the time is not up yet. So if you're positive on the market, you want a pretty strong advance. I think there's an argument that quite the opposite will happen. Let's look at a 30-minute chart. We had a stilt here, half a diamond's enough, so we have a diamond on stilts as an inverted formation. Here's the first test of the origin of the left stilt, which held. I don't consider this test number 2 because I think it's all part of the same formation. So you anticipate this holding. Now let's clean this chart up a little bit. It's important to recall that I think the initial thrust up is what really counts. All these attempts to get higher highs have not worked out. And today's late high was a 61.8% retracement of this move. The close was a 50% retracement, and this is 23.6. Now, I originally was calling this a stilt, and that a diamond, which it is. But I think it's more realistic to think that the pattern has morphed into a stilt up, a stilt down, with a big diamond in the middle. Here's your diamond. If that's true, then the first test of the origin of the left stilt should hold, and the second test should fail to hold in a large way. And if that interpretation is correct, we should start a stilt-like move down tomorrow, undercut this price of $20.49.35, and have a big drop. It's not carved in stone till that happens tomorrow, if it happens. So we're at a critical stage. I think tomorrow's early trade is going to be very significant. I think if we have a strong move up, we have a chance to hit 2078.42. But if we have a strong drop at the open, it could get very ugly before things are through. And if neither one of those two things happen, then I really don't have a call. And that's today's video.